So cryptocurrencies are the most popular they've ever been, and while there's a lot of money to be made, as you probably know, there's a lot of money to lose if you're not careful. I'm speaking from experience here. With all the new faces pouring into crypto, which is amazing, some people are completely new to investing in general. So in this video, we're going to talk about the 5 worst cryptocurrency and general investing mistakes that I see many people make all the time, especially beginners, and how you can avoid them so you can start investing profitably. At least until Papa Powell ends his horrible bear market. There's actually a lot more on the list, but I couldn't squeeze them all into this one video. There will be a part 2, so subscribe if you don't want to miss it. Also, as thanks to you guys for supporting me, I'll be giving away this metal seed phrase case to one lucky person. So stick around to the end of the video. Now, let's see how many times I can say investing in 10 minutes. Drop a comment with your best guess down below, and let's get right into it. First up, the most common crypto investing mistake by far that I see is investing money that they can't afford to lose. I know it's the oldest rule in the book, and you've heard it a million times, but you'd be surprised how many fall into the trap. It's a trap! Cryptocurrencies are incredibly volatile and prone to wild swings, so you should invest an amount that you'd feel comfortable seeing even after a swing. Here's how you can tell if you're too invested. So think of a crypto investment that you made or are thinking of making. Take the amount that you invested and cut it in half, no questions asked. If that just made your heart jump with anxiety, you might have too much invested and should consider cutting back. You can use this for stocks, real estate, and any other investments too. As an investor in any of these, especially crypto, you will lose money at some point. Above anything else, you should make sure that you have at least 3 months of living expenses saved up before you even look at crypto. I know it's boring, but there's a good reason why literally every single person who is legally qualified to give financial advice will tell you that. I can't give you financial advice, but I also have a safety fund. I also saw so many people who had their life savings in platforms like FTX, which went bankrupt, and they may never see that money again. If you want to hear the full story, I covered that in a separate video. Link is up here and down below. Now, I feel absolutely terrible for the people who lost their life savings, but also that was an incredibly risky thing to do. Even if you parked your plain old cash in there, FTX was not FDIC insured, so there was no guarantee that you could ever get your money back. Now, the fact that they lied about being FDIC insured and got a cease and desist is a whole other can of worms, but it just goes to show you that you shouldn't even think about going near any of the crypto industry, not even the safe guys, with money that you can't afford to lose. Mistake number 2, many people invest in cryptocurrencies without doing their own research. And most of the time, it's because they hear about it through the interwebs of influencers and people on social media who hype up a specific cryptocurrency and claim it's the next big thing, or they see green and think that investments only go up. It's important to always research before investing in anything, especially cryptocurrency. As boring as that is, there are just so many bad projects and even scams out there. For every crypto investment, make sure that you understand the 3 T's, which I actually just made up. So that's the technology, like what problem is it trying to solve and how it works. The tokenomics, like who gets the tokens and how the total supply can go up or down, and the team behind the project. Now, take Logan Paul's Crypto Zoo as an example. Now, drama aside, at the end of the day, it failed in all 3 of the T's I just mentioned. The technology was not solving anything. It was kind of like Axie Infinity that many other projects have copied, but with a ton of features stripped out, like the whole battle system. The tokenomics were heavily skewed towards and manipulated by Logan Paul and the team. And finally, the team itself was made of proven scammers and even straight up criminals, including Logan Paul himself, who had promoted many pump and dump projects before. What's worse, they weren't even able to build CryptoZoo since it launched over a year and a half ago. And being a stripped down clone of other projects, it's not that hard to build, especially when this guy built an actual working version of CryptoZoo in a few hours by himself. It's an awesome video and it's only 4 minutes long and it's really funny, so definitely worth a watch. I'll link to it down below. You've probably also seen video titles like all in on whatever coin or top 3 altcoins for this month. So first off, most of these influencers don't actually go all in and are just saying that for clickbait, which a lot of the time gets them tons of views. In fact, many of these people only have like 5 to 10% of their entire net worth in crypto overall and have plenty of cash flow from these videos to afford it. What's worse is many influencers are paid anywhere from like $10,000 to $100,000 to make these videos, which is paid with your money that comes in from those sponsorships, and that gets pumped right back into influencer marketing and the cycle repeats itself. So it's basically like you are paying them to tell you about their project that 9 times out of 10 doesn't even have an actual working product, let alone a good one. Fortunately, I don't take any sponsors, even though I get plenty of offers, so that I can speak freely about everything. So as always, this video is sponsored by the subscribe button. It's quick and free, it means a lot to me, and you can always change your mind later. So when you hear influencers on social media talk about cryptocurrencies, especially those with a small market cap, you gotta take it with a grain of salt, because at best, many of them are trying to predict the market, which no one can do, and at worst, they're getting paid and sponsored to promote those projects. So please be careful and just do your research. Mistake number 3, buy high and sell low. Now, I know you're probably thinking, yeah, duh, that's the total opposite of what you're supposed to do. But it's so much easier to slip up than you think. I see a lot of people, myself included, get caught up in the hype of cryptocurrencies and even stonks and end up panic buying or FOMOing in, as the kids like to say, at or near the peak, maybe without doing your research, or because of an influencer, like we just talked about, and then panic selling after the slightest dip. Let me paint you a little picture here. Let's look at Doge back in the first few months of 2021. In all the years leading up to 2021, Doge was worth a max of like 1/3 of a cent. While it was widely popular, no one really took it too seriously compared to others like Bitcoin and Ethereum. It was the original meme coin after all. There's no way that the price could go up that much, right? Wrong. And it turns out that that was actually the best time to buy. Everything changed when the Fire Nation... That is the wrong script, my bad. Everything changed when the popularity of crypto exploded in 2021 across the board. Thousands of people saw the price of Doge had increased from 1/3 of a cent to 3 cents in a couple of months to 30 cents in another couple of months, increasing in value by 100 times. Like, think about that for a sec. $100 could have turned into $10,000 in a few months. We also had Elon Musk pumping the coin, even further inflating its value. People were shouting from the rooftops that Doge would hit $1 when Elon Musk went on as a guest of Saturday Night Live to promote it. Thousands and thousands of people panic bought at the highest price Doge had ever dreamed of seeing, thinking it would go higher and that they were about to make a quick buck. Pretty much as soon as the episode aired, the price peaked at 74 cents but immediately crashed. Elon never mentioned Doge, and it continued to bleed out for the days and weeks that followed. All the people who had bought at the top lost a lot of their money, and even more when they probably panic sold near the bottom where it basically started. They could have held for a bit longer for the following mini pump and recouped all or at least some of their losses, but ultimately FOMO is what got them to panic buy in at a less than ideal time. If you just ignore the hype, as hard as it is, it will save you from a ton of pain. Mistake number 4, investing in cryptocurrencies that are brand new and not well known. There are so many people out there that want to catch the next big thing by investing in brand new crypto projects fresh out of the pancake swap oven. While this can work, you need to make sure you're thinking about these with the right mindset going into it. For example, not investing more than you can afford to lose, like we talked about earlier. So think of buying in these brand new or low cap cryptocurrencies like investing in a startup where 9 out of 10 fail and only 1% ever make it big. Take Shark Tank, for example. Like, yeah, it's a reality show, but at the end of the day, it's real money on the line, and even their success rate is 94%, which is far from perfect when you're slinging around 6 and 7 figure deals. And even the best startup investors actually bank on completely losing their money 9 out of 10 times. So with that in mind, do not buy a project that doesn't have a working product yet. In the tech industry, we call this an MVP, not most valuable person. It's minimum viable product. This is just an initial version of a product that has met the bare minimum requirements that you can safely release for people to use without it exploding in your face. In crypto, so many projects start with a grand idea and sell people on a promise of that idea with the dream of striking it big without even building an MVP. And a lot of the time, these teams just cannot deliver for any number of reasons, and it usually boils down to a lack of experience, like with CryptoZoo that we talked about earlier. Or worse, they choose not to deliver with the intent of pulling the rug out from their own project with all the investor funds. And since it's crypto, there's no real accountability or legal action for anyone to take if it falls apart. Again, with CryptoZoo, Logan Paul has absolutely no legal obligation to go build it. So please be careful with new cryptocurrencies. As a beginner, I would stick with the big names, not financial advice by the way. But if you're going to invest in the newer, smaller ones, just go in planning for the worst, which will save you a lot of stress. Mistake number 5 is using leverage. Leverage is basically borrowing money to increase your exposure to an investment. So for example, if I have $1,000 worth of Bitcoin, I can put that down as collateral, take a loan out on it of up to another $1,000 and use that to buy more Bitcoin. Just pretend this is another Bitcoin. So now I have a total of $2,000 worth of Bitcoin, which is great if the price of Bitcoin increases, but as we've seen over the last year, investments don't always go up. If that $2,000 worth of Bitcoin decreased by 50%, like it could have in 2022, then I have to pay back that $1,000 that I borrowed plus fees, and I'm out $500 from my starting investment, which likely has been sold to cover the whole loan. Nice, didn't miss. I'm getting pretty good at that. So effectively, I lost all of my Bitcoin where I would have only lost half if I hadn't used leverage. This is essentially how FTX collapsed under SBF's management. Again, I covered all that in other videos, but basically he created his own cryptocurrency, artificially inflated its value way beyond what it was actually worth, then leveraged all those tokens to take a loan out to essentially buy more cryptocurrency, which worked great in the bull run and he looked like a genius, but not so much in a bear market. His terrible use of leverage collapsed all 3 of his multi-billion-dollar companies, leaving millions without their hard-earned money and landed him in federal prison, getting charged with wire fraud. So if you don't want to wind up like this guy, don't use leverage. So that's it. Those are 5 of the most common crypto investing mistakes. There's definitely going to be a part 2 to this, but I'd love to hear your thoughts on these first 5 or how many times I said investing. Thank you so much for watching. If this helped you, leave a like to get this useful info out there. And might as well subscribe too while you're down there. I'd like to hit 50,000 subscribers by the end of the year, and it would be amazing to have that many of you guys on for this ride. And as thanks to you guys, I'm giving away this metal seed phrase holder. You can put your seed phrase in here using these metal letter cutouts, which is way more physically durable than paper. It's made by Keystone, who also make hardware wallets. Just leave a comment down below on this video, make sure you're subscribed, and I'll announce the winner in the next one. Stay safe out there, and I'll catch you in the next one. Take it easy.